Hey everyone, if you are new, well, I'm glad you found my channel. I personally am an investor and you can check out my portfolio in previous videos. Unfortunately, people spend far more time researching their next phone or TV than their next investment. If you're someone who might be a little concerned that there's too much hype around things like Bitcoin or Tesla, well, you're not alone. My strategy is to look at an investment based on its fundamentals and its financials, just like we would if we wanted to buy the entire business ourselves and then run it ourselves. And today I'm going to go through with you what are the top stocks on my watch list as of right now. Because some of the companies that I've been following over the years, the prices are a long way away from what I think their fair value is or what I think I would be buying them at. So these are the companies that are not that far away. Now, as we go through each one of these companies here on my watch list, I'm also going to show you the target buy price that I have at the moment. And look, this is actually, I've narrowed my watch list down to just the companies that the stock price isn't too far away from where I'd like to be buying them. See, some of the companies on my watch list like Nvidia and Google and things like that, the stock price is nowhere near what I would be wanting to pay. So I've just ruled them out for now. So this is the watch list that is not too unreasonable. Okay, so we're going to go through the stocks on my watch list one by one. Some of them are small, some of them are mid-size, some of them are large caps. And like I said before, they're not too far away from my buy prices. Okay, the first company is Alibaba. I've talked about Alibaba a lot on this channel. It's a very popular stock at the moment. Now, the reason I think it's very popular at the moment is probably because of the price and that there's a lot of super investors starting to get on board with this company. Now, I've already bought a lot of these and I've actually sold even more put options on this. So this is going to probably turn into a huge position of mine, and that's fine. Now, I think the future the growth driver here is definitely their cloud side of their business, plus just the China, East Asia growth tailwinds that they're going to get as well. Fantastic company. I've gone through a lot of detail in this company before in previous videos, so check those out. And another reason is that Monish Pabrai, my favorite investor, has invested in the company and he's declared it an apex spawner. What that means is it's a company that is spinning off and spawning out all these different things and all these different companies that have lots of different potential to grow. And these are the types of companies that can compound for long, long periods of time. And Alibaba definitely fits that bill. Now, my buy prices, including a strong margin of safety, is, well, under $180 is where I've sold a lot of puts at this point. So I'm hopefully going to be picking up lots of shares at this 180 price. But anything under $220, I'm happy with, considering that is actually better than what the great Charlie Munger paid for his Alibaba shares. So anything under 220, and that's when I'm making this video at the moment, the price is like 190 or something. It's falling. So if you can get anything around this price at the moment is good buying in my opinion. Okay, next stock on my list is Naspers. Now, the ticker that I'm looking at is NPSNY. So that's on the OTC markets. It's actually the ADR on the OTC markets. Now, I've actually already bought a lot of these as well. The reason I bought a lot of them is because I love Tencent, the company, and Naspers owns 28% of Tencent. And Naspers has a big discount to the value of Tencent. Again, I've made lots of videos on this topic before. Check those out if you want a detailed explanation of what I'm talking about. Tencent and Naspers, in my opinion, have that same spawner DNA like Alibaba. See, Tencent owns stakes in hundreds and hundreds of different companies. They also have WeChat, which I think is just an absolute beast of a product. And Naspers as well, not only do they own the big chunk of Tencent, but they have their own, they're like a VC firm themselves, and they have stakes in lots of different companies in India and throughout the world. And look, between the two of them, there's a lot of things going on here, and there's a lot of opportunities for growth in the future. And they're proving that they've been growing for decades already. I don't think that's going to stop. And I think the places that they're playing, like e-commerce, gaming, and just the geographic location that they're in, I really love this particular business. Well, the Tencent side of this business, and I like buying it with Naspers as the bigger discount. So buying Naspers, I think anything under $40 is pretty great. Again, the prices have been falling pretty dramatically. I think it's like $35 or something at the moment. So I've been buying significant amounts of Naspers at the moment as well. I'm running out of cash pretty quickly, but that's okay. And out of all the stocks not even on my list, but even the companies that I currently own, I think Naspers gives me the highest expected return on investment. Well, especially of the large caps that I own, but I think it could be the highest return on my investment overall. So it'll be interesting to see what happens over the next 5 to 10 years. Okay, the next stock on my list is Nintendo. So the ticker is NTDOY. Now that is on over-the-counter markets in US dollars. So I didn't buy it on the Tokyo Stock Exchange. I've bought this on in the US. Now, I think Nintendo just have amazing brands, Mario, Pokemon, all this stuff. They've got some serious longevity to those brands, and I think that's going to continue for the long term. I love their conservative, long-term orientated management team. Now, the growth drivers for the future, more stores. Now, stores, you might be thinking, well, retail stores isn't that going to be that profitable, but they opened a retail store in Tokyo, and the lines were, I heard it was 5 or 6 hours long for the queue to get into the Nintendo store. And months later, there's still this massive queue sitting outside the Nintendo store in Tokyo for people trying to get into the shop. Now, that reminds me of Apple about 10 years ago, and I think that's a great indicator of how powerful this brand is and how strong this company is as well. There's also lots of talk of new movies coming out with like a Mario movie and things like that. That's going to drive so much more sales in terms of the stores obviously, but their online sales and their games as well. New games of the future, they can just keep churning out new ideas and new games. Some of them will be winners, some of them will be losers, but software is such a great business to be in that they can have some hits and some misses, and the hits are just huge. So there's so much more potential in their business model that they have. And then the devices that they can bring out in the future. Better devices locks people into the Nintendo ecosystem. There's just a lot of growth drivers here. And just the gaming industry as a whole, I think, is growing quite quickly too. So look, I think it's probably my favorite of the large cap companies, maybe from a nostalgic point of view. And my buy price is under $55. So unfortunately, I haven't been buying these of late. I did buy a small piece of Nintendo around about $70 just to sort of get into the investment. But at $55 is where I'm really eyeing off this company. Unfortunately, it hasn't been there yet, but I'm just waiting, biding my time, hence why it's on my watch list. The next company is Etsy. Now, this is a mid-sized company, about $20 billion in size, compared to the hundreds of billions of dollars of the companies earlier. Now, I haven't been able to buy this one yet because this buy price is $120. It's actually shot up to about $200 of late. So it's actually starting to get a long way away from my buy price, and I might have to take this one off my watch list for the moment. But look, I just really like Etsy. I really like the strong marketplace and the moat that they're building up around their business. I think this is a company that is going to be around for a long period of time. I think the creative people that are using Etsy as a way to make income is also really strong. I'm a big fan of Etsy. I think this is a fantastic company, and I've made a full video on this one as well. So go check that one out if you're more interested. Okay. Stock number 5, which is a small cap company called Shinoken. You would have heard me talk about Shinoken before if you're someone who follows my channel along, but this is actually my biggest position. It has multiple diversified revenue streams. It has a long runway for growth in both Japan, Indonesia, Asia in general. Oh, if you don't know what Shinoken is, by the way, they're a real estate development company that builds apartment buildings and sells them, but also keeps the people who are buying these properties, these apartments, they keep them for the long term by helping them with the management of the property. And it's just been a fantastic compounding business over quite a long period of time already. Their finances are very solid. They have a really good incentivized management. The CEO is heavily invested in the company. It's at a great price. It's about 1,300 yen at the moment. It's a great price. And this is actually another Monish Pabrai's stock. He has a big chunk of a big stake in this company, and I've followed him into this company after I've done the research as well. Now, I'm going to be buying more if it ever gets under 1,000 yen. Now, I was buying at about 1,200. That was my first buy price. But at 1,000 yen is like where I'd be wanting to buy more. I've actually already, because it's such a significant part of my portfolio already, it's my biggest position. I'm only going to buy if it gets a lot cheaper. All right, the next stock on my list, on my watch list, is Gran Colombia Gold. Now, you might be thinking, what the heck am I doing looking at a gold mining company? That's nothing like any of the companies we've talked about so far. But, and I haven't bought into this company yet, but it is on my watch list because it's not far away. The reason I'm looking at it is because it's going to get a point where it is so underappreciated and overlooked that I think it's going to be a no-brainer very soon. It's a very cheap gold producer based in Colombia, and they have new operations in a country called Guyana as well. And they're making really good money. They're producing very reliably a lot of gold, and the gold prices are quite strong, and they're just getting totally overlooked by the market. I really want to buy this company at $3.50 Canadian. Now, it's around about the mid fours at the moment when I'm making this video. And at this price, at this $3.50, I think the risk reward ratio is just super strongly in my favor. And the reason is it's just going to take very little time for the company to make their enterprise value at this price. So this is going to be something that I'm watching closely, and if it does get to 350, I think I'm going to have to jump in because it's getting silly at this price, in my opinion. So if I want to get a big return on my money, this is the type of play that is very attractive to me. So I'm just keeping it on my watch list. Maybe I do, maybe I don't. I like my other companies better because they're longer term compounders. But sometimes when something gets silly cheap, it's going to be a really good investment. So now I'm going to turn to the stocks that I am still researching. Now, the first one is Naked Wines. I'm really interested in this company. It's about $870 million market cap. It's an online wine retailer essentially. And they have this marketplace economies of scale. So the customer acquisition gets cheaper the bigger they get. Margins are not strong with this business because shipping wine obviously is expensive and wine is bulky, and there are some issues around margins, but there are some fantastic people who have invested in this company. Norbert Liu, one of my favorite investors of Punch Card Management, has a big stake in this company. Greg Alexander has a stake in this company as well. And my buy price, well, I need to do more research on this. And all these companies that I'm still doing research on, these buy prices are not set in stone or anything like that. They're evolving, but at the moment I'm looking at around that 600 pence range. I think it's around the 850 pence range at the moment, depending what day you're looking at it. I've been digging deep into it at the moment, but I think this is the price that I'm willing to pay. The next one is called Kelly Partners Group in Australia. So it's a smallish company, $125 million market cap. Now, it's actually an Australian accounting business, and they're acquiring other like small accounting businesses and bringing them together and using their expertise to make these companies more efficient. And look, they're just essentially buying these accounting companies for really good prices, maybe 4 times their profit. And that's a really strong return on investment. So Brett Kelly, the CEO, he's a good capital allocator. I'm still learning a little bit about him at the moment. There's a lot of room to grow in the Australian accounting market world. And the reason I found this company was another YouTuber, Investing with Frank, talks about this with me, has talked about this with me before. And I know he's got videos on about this topic, and I think it's one of his biggest investments. So he put me onto this. So thank you, Investing with Frank. I appreciate that a lot. I am looking into the company. My rough buy price at the moment is under this $1.50 Australian, but I have to do more research on this company. I'm not sure whether that's the right price to be paying or not. I actually don't know yet exactly, but based on my very basic calculations, that's about the price that I think is pretty attractive. Okay, next company is AIC Interactive Corp. A lot bigger, they're about a $12 billion market cap company. Now, this company's been around for a long time. They're actually a company that they're sort of an anti-conglomerator, is how it's been explained to me, that they grow these companies up from like early stage or and then get them to a point where they IPO, and then they spin them out as an IPO and keep some stake in that company. So they spun out Match Group. So they actually internally built Tinder. They also spun out TripAdvisor. They've spun out Vimeo. They've spun out Angie Home Services, all billion-dollar companies in their own right. They're an amazing spawner with over 150 different companies that they're growing internally right now. They're going to be spinning them off as they get over this billion-dollar mark, and that's going to create a lot of value for their shareholders. And the reason I know I'm following this is because of Dennis Hom, who is the owner of SureSpring Partners, and he's a very smart guy, very smart investor. I haven't worked out the buy price yet, so that's why I'm still doing research on this one. VIP Shop is next. Now, this is a bit of a wild one here because China is getting very, there's a lot of bad sentiment towards Chinese companies at the moment, and Chinese tech companies in particular. So they're about an $11 billion market cap. They actually have negative enterprise value because they have so much cash in their books and very little debt. They're a discount online retailer in China, and they're backed by Tencent and JD. Tencent and JD own over 10% each in this company, and there's a lot of synergies between Tencent, JD, and VIP Shop that I think is a very interesting business model that they're running here. And the thing is, it's just getting really cheap, and that's what's attracting me to this company in particular. Under $12. It is just getting very difficult to ignore. I think that under $12, my margin of safety is getting very, very large, and I'm still doing some more research on this company. I'm not 100% on it, even if it does get under $12, because it's a small Chinese e-commerce play, and I've already got a lot of exposure with Alibaba and Tencent, but doing my research on this because this could get to a price where it's just silly as well. Next company is VIQ Solutions out of Canada. They're a small cap company, $175 million in market cap. They do transcription software and services for like the legal and courtroom clients. Their management team has been very effective in growing this business, but they're still unprofitable. So that's a bit of a problem for me. But they have very sticky software and their services, plus these long contracts with government entities. I think they have a long runway for growth. And I found this from Alta Fox Capital. And I think the work over at Alta Fox that they do is fantastic. And there's write-ups from Alta Fox as well and on Value Investors Club. And I'm still doing my work on this one, but I'm very interested in the long-term compounding ability of this company might have. Haven't worked out a buy price yet though. The last company that I've got on that I'm researching at the moment is called Mobruk, and now this is out of Poland. Now it's a waste management company. It's about a $300 million market cap. They have just unbelievable financials. It's a very unattractive, boring, difficult to run business, yet it's just a very important business. It is a very stable business. It has a defendable competitive advantage because the capital needed to get a waste management company up and running is really, really high. So once you've done it, well, you have a big advantage over any newcomers into the space. And it's just very difficult for investors throughout the world to understand this business. One, it's based in Poland. Two, it's on the Poland Stock Exchange. Well, I think they call it the Warsaw Stock Exchange. I haven't looked into that exactly yet. And the intricacies of the Polish waste management market is not the easiest thing to understand. I'm really enjoying studying this one. I think there's a very interesting opportunity here just because the company appears just so well run from a financial point of view. I'm very interested in this. There's actually some opportunities for it to grow significantly throughout Poland because it's only in a specific geographic area at the moment, and they do have expansion plans. I'm very unsure about the prices, and I'm still got a lot more work to do on this company, but I am enjoying the research on this one. Hopefully I'll bring this idea to everybody soon. So there we have it. That's the end of my watch list video. Now, I've got the list here of my current favorite companies on my watch list and the ones that I'm currently researching. Some of them I'll scratch off. Some of them I will move over into my current favorites. The research list I just haven't got the prices for is the problem. That's why they're on this research list. But there you have it. I hope you've enjoyed this video. If you want to see an updated watch list maybe every 3 or 6 months, please let me know in the comments so I know that this video is valuable to you out there. I hope this has given you maybe some ideas for your own portfolio and your own research. Again, please do your own due diligence. Now, to buy a lot of these companies, you do need Interactive Brokers or Saxo Bank, because those brokerage accounts will work with international markets and international exchanges. Robinhood's not going to help you. I do have an affiliate link for both Saxo and Interactive Brokers in my description. So if you want to help my channel, you'll also get $200 of Interactive Brokers stock when you sign up and deposit money into Interactive Brokers. And that will give you, well, a good start anyway. $200, you can just sell that. It's just a gift, but then you'll get access to the international markets. And I think that's very important because there are some fantastic companies throughout the world here. I don't even have many American companies on this list. So look, you're missing out if you don't have access to the international markets. Again, if you haven't subscribed to the channel, please do so before you leave and give the video a like, and I will see you soon.